Welcome to Bears in Exile. Today is Tuesday, July the 17th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UU, PFXE, GLD, SLV, and all the rest. Starting off with the Dow, pretty an amazing day. Ben came out, said his piece, which wasn't dovish, which the market was not too enthused about. He didn't really talk about easing in the way that the market wanted. And initially we had a very nice decline. And as usual, for the past couple of weeks, the miracle rally kicked in and away it went, going up 78 points. A huge spread over the course of the day, almost 150 points. So off of its lows, 150 point move. Pretty darn incredible. And today, closing above the upper price consensus level, exceeding the high from the last couple of days. This is definitely a bullish move. Absolutely. Well, of course it is. It's up. Duh. All right. Beyond that, what can we see? Well, perhaps. This is just a perhaps. This is a long shot. We've talked about the pivots, and back here how we needed to break into a new pivot low to break this cycle. One thing I can see crapping out here is if this craps out before it's able to take out this pivot high. And I think that there is a definite strong possibility that that will be the case over the next couple of days. But this buy the dip mentality is still massively strong, so I could be totally wrong about that. We have more green creeping into the heat map. A tick up on the CCI, a tick up on the 14-day RSI moving average after it hit flatlined for so long. It's high. Stochastics moving on up, RSI moving up, MACD moving up, not getting a bullish cross yet, and the MACD histogram also moving up. This is a bullish chart. Absolutely, this is has a nice outlook to it. And last night we were talking about the need to see if we were going to have a if we were overheated, if we needed to have a corrective move at some point. We had the histogram sloping down, the MACD ticking down, all these different things. And it was an outright bearish simply because the 14-day RSI moving average has not turned down. And what changes after today? Well, the stochastics reset themselves and are now at a position where they can turn over. Same with the CCI. The RSI kind of hanging around, slight tick down. MACD histogram, slight tick down, kind of hanging around. MACD itself ticking up slightly. 14-day RSI moving average poised to roll, slight tick down at the end of the day. And of course we still have green in the heat map after a big move up. So 60-minute once again questionable, and in my opinion in a better position for some kind of down move. Which isn't to say that last night's 60-minute questionable wasn't wrong, because at the open today, it went down. It went down really good, and that's why I'm not displeased with the action today whatsoever, because it did what the 60-minute desired, and then it finished off doing what the daily chart desired. So that's excellent. That's excellent. As long as things make sense, I'm a happy camper. Because as long as things make sense, we can make money. And that's all that really matters. If it had gapped up 1,000 points right off the start and then raced 500 points to the upside, I'd probably be mad. So anyways, my chain of thought. Going on, SPX. This one did better than the Dow, slightly. Of course, breaking the highs from the last 2 days. It was already above the upper price consensus level. We do have something warming up in the heat map. Up on the CCI, up on the 14-day RSI moving average, up on the stochastics, up on the RSI, up on the histogram, up on the MACD. This one getting a bullish cross. This is better than the Dow. No doubt. 60 minute, I don't think there's any change relative to anything else. Nope. You do have a uptick on the RSI. Only real difference. And you don't already have a single downtick on the 14-day RSI moving average. Two very, very minor differences. Nothing to get excited about. Going on to the VIX. Now this one for the bears. Disappointment. Absolutely. We talked about the need, healthy need, to retest this low right here. Well, it was retested today and it was pierced, making a new recent low. Bad for the bears. Only good thing is we have this low back here, which it could be tested upon. Only way I can see of, I mean, at the least you should have a retest of today's low before moving on if it's going to go up. But if you were to break today's low, you could reset all of that by having a retest and a bounce off of this low back here, and that would be fine. So, we'll see. And that's about the 1583, 1575 area. A good bit down from where we are now. It certainly would be noticeable in the market. It would line up nicely with the daily in the Dow and SPX. Beyond that, yes, we have a bottomish area forming in the heat map. It's not very happy. 14-day RSI moving average ticking down, stochastics down, RSI sideways, down on the histogram, down on the MACD, no completion of a bearish cross. Definitely not a nice looking chart. Not the end of the world, but definitely skewed bearishly against the VIX. 60 minutes. Is this one overheated? Well, had the really nice move at the open to the upside, making a couple-day new high before absolutely falling apart and recovering some by the end of the day. Not bad. You can see the bottoming warning area, 60-minute time frame in the heat map. We have the CCI climbing, stochastics climbing, 14-day RSI moving average turning up on the RSI, up on the histogram, and up on the MACD looking for a bullish cross. Yes, there is a need for a bounce. We do have a good lineup, a really good lineup for that, in fact. So, could it be strong enough to change the daily? I think the daily has a couple of days left in it, but I guess we'll see. Moving on, TNA. Look at that. Totally not like the Dow or SPX, and I'm in the wrong time frame. Ha ha ha. I would say I got you, but I got me. Alright, here we are. It is not a green candle. Look at that tail on that sucker, going all the way down to the long-term moving average bar and bouncing and back from it. It did make a slightly higher high today, recent high. And, was it this chart last night? I don't remember if it was this chart. We were talking about pivot points and how we needed more to the upside for a correct pivot if we were going to get a lower pivot high before trying to make a lower low. And certainly this could fit the criteria. The Dow finally could fit the criteria, so could SPX. Still have the middle Bollinger Band above all the moving averages. This isn't strong, in my opinion. I mean, the new high is so small. The tail is so strong. And well, to my eyes, it just doesn't look good. We do have a topping area forming in the heat map. It's not bright green yet. Down on the CCI, up on the 14-day RSI moving average, it has never stopped through all of this. Mixed on the stochastics, sideways on the RSI, down on the MACD, down, actually sideways on the MACD histogram. I guess that would be sideways on the MACD as well. But overall, once that 14-day turns, this sucker is aligned really, really well for a decline, and this should lead the Dow. So, not impressive. Not impressive. We weren't impressed last night either. So, 60-minute time frame. Yeah, you know, it's just holding this. You could draw a straight line through this. This is a whole lot of chop of nothing. Don't have too much in the heat map, a little bit of green. CCI is going down, poised well for a decrease. Same with the stochastics. Same with the RSI, 14-day RSI moving average. RSI going sideways. Down on the histogram, it's very, it's hard to see. I'm going to say sideways on the MACD itself. This chart is very much a push-pull, because while it is aligned more bearishly, something happens, it breaks out of this line, this level, could have a lot of people jump into it fast. So this one I would definitely say bearish slanted, but a push-pull. Aha. The very, very interesting chart. And I need to get back to the right time frame. Hello. I'm going to trick myself again. UUP. The star of the show. The belle of the ball. This one is the single most important chart in existence at the moment. And all over the place. Look at that. Up and down. And I mean, the candle is not a pretty candle. The most important thing is we had the downtick a couple days ago, a couple market days ago. We had the target 2283 right here. We have missed it by 1 penny, which could easily be taken out tomorrow, no doubt. I mean, we could be going down to this trend line, we could be going down to the long-term moving average bar, we could be going down to the major price consensus level, and if the bulls are really lucky, this is the scenario where the bulls just kill the bears, and that's all there is to it, is if we fill this gap right here, which is a long shot, because you have this line, long-term moving average bar, major price consensus level. That's a lot to overcome. And I mean, it's taken this many days just to get down this far. Can it have a waterfall effect? I suppose it's possible, but is it likely? No. Ben didn't say what he wanted today or what he was going to do. UUP shot all the way up here, which is we thought it would go up in a very good way. Listed that in the daily running thread about midnight last night, and but fell apart. Indicator wise, it's still not great for UUP bulls. We don't have anything in the heat map one way or the other at the moment. It's totally neutral. With the CCI going down, the stochastics going down, notice the fast is already oversold, has already crossed the 14-day RSI moving average. It's going to turn before too long. 14-day RSI moving average is moving up. The RSI is moving up. The histogram is down, the MACD is down. So 1 penny to go for a bubble corrective move. That also fills this little tiny gap that existed before. And so, bubble corrective move and a gap fill. At that point, we'll have to see what it wants to do. But can all of these be ready for a reset at that time? Yes. But at the moment, does it look good? No. So, hopefully that's not counterintuitive, but that is what it is. FXE, the euro. Oh, you know what? And I didn't mention. Is also on UUP positive that it exceeded yesterday's high. It didn't close there, but it did exceed it. So that still makes me believe that there is some gas in the tank for dollar bulls. Something to throw out there. FXE, the euro. Talked about the uptick target. We still have a good ways to go. Notice that it didn't, or did it? Oh, okay, it exceeded it by like a penny or two. Exceeded yesterday's high by a penny or two. Look at that tail on that sucker. It's not at the bottom of a range. Shows that there's plenty of people who don't believe in the euro still. 14-day RSI moving average just getting underway to the downside. Stochastics going up to meet it, along with the CCI. RSI going sideways up on the histogram and barely up on the MACD. Yeah, there's a lot of... I would read this as there's a lot of people who don't believe in the euro still. But we'll see if that uptick target is resolved. 3 days to go on that. At least we'll know by the end of the week for sure. But much, much farther to go. If it does, I would suspect that that's a gap fill. And similar to UUP, if the bulls really get it going, then I would assume it's this gap fill, which coincides with the major price consensus level. So much to go through. Lower price consensus level, the ascending resistance line, a good portion of the long-term moving average bar, and all of this distance. So, anyways, that seems like a tall order to me. CompQ, the NASDAQ, should be leading just like TNA. Notice it looks nothing like the Dow or SPX. It looks like TNA. And look at that. At its lowest, exceeding the lows from the last 2 days. That is a definite sign of weakness. And but it did close above the long-term moving average bar. It did close above the upper price consensus level. Those are two positives. 14-day RSI moving average managed a tick up. CCI going sideways. Stochastics mixed. Sideways on the RSI. Sideways on the MACD. And barely up on the MACD histogram. This is not a very strong chart to me. Its internals are not. Could that change tomorrow with the big green candle? Yes, it technically could. But at the moment, it is not convincing. Apple. You know, last couple nights had some misgivings about Apple. Sure, at its high today, had a good move to the upside. By its close, not impressive. It's not to say this is a bad chart. We have the CCI ticking down, a little bit of green in the heat map. The 14-day RSI moving average is moving up along with the stochastics. RSI is down, histogram is down, and the MACD is going sideways. I wasn't a believer the last couple of market nights, and I'm still not a believer at this moment. I'd like to be, but it's not convincing. Matter of fact, a look at the 60. This one's so important. It deserves a look at the 60. You can see today, gapped open high, fell apart, came back, fell apart, tried to mount a comeback by the end of the day. Overall, just not what we'd be looking for. When we want to look for a move off of the long-term moving average bar, comes down, kisses it, penetrates it, it bounces off, it's bullish. It's coming back again. It's not making as deep a penetration this time, which is a good thing. The lows are not as low as they could be, which is a good thing as well. we would have to see this thing bounce off definitively, and certainly it could. But yeah, it just wants to pick a fight here. I don't know why. CCI heading down, stochastics heading down, 14-day RSI moving average ticking up, RSI ticking up, down on the histogram, down on the MACD. Not the best 60-minute chart either. GE should be leading the Dow. Is it leading the Dow? No. It isn't at the moment. Closing inside the long-term moving average bar, still below the major price consensus level, unable to exceed the last 2 days of market action. Yes, exceeding yesterday. No, exceeding the day before that. Ending with a spinning top, indecision. 14-day RSI moving average just getting underway to the downside. Up on the CCI, up on the fast stochastic, sideways on the slow. Down on the MACD, up on the MACD histogram. It is very much a push-pull. I mean, we can have a complete reset of the stochastics here and the CCI here. There's only so much room before it meets the 14-day RSI moving average if it gets that high and turns around. And it's not in the best candle position. And it doesn't have the strongest candle. It's not a terrible looking chart, not by any stretch of the imagination, but it's not a good looking chart. JP Morgan, most important bank. It just can't seem to win against the long-term moving average bar. Pierced the major price consensus level, exceeded the lows of the past 2 days. Its high was not able to exceed either of them. 14-day RSI moving average is positioned for a down move, along with the CCI. The stochastics are rolling, trying to roll over. Down on the RSI, up on the histogram, sideways on the MACD. This is not a very convincing chart either. If it gets all kinds of strength tomorrow, yeah, it can carry the market with it. Maybe Ben will say something that is massively positive for banks, and that'll change this one around. It's not a terrible chart. It just isn't one that looks like it wants to break out of all of the recent highs. And XLF. Notice how this one is different. Maybe JP Morgan is just not a good bank anymore, but XLF able to exceed the last 2 days. Very nice. Close to the current high. Current recent high. 14-day RSI moving average moving up. Stochastics moving up. CCI sideways. RSI sideways. Histogram up. MACD up. This is just incredibly more positive than JP Morgan. So, yep, a world of difference. Can this one carry the market all by itself? Yeah, not to the extent that JP Morgan would, but definitely this is much, much more positive. Even its shadow, its tail, didn't even get to the long-term moving averages. So, matter of fact, they got right to the middle of that stinking green bar, which we know is always support or resistance. Very interesting that it would crap out at that point. Or maybe not. Maybe it's not a surprise. But interesting nonetheless. And then just for fun, my little beast in my pocket, stinking Walmart. This thing is so darn slow. You can see people want to sell it. You can see that people evidently want to buy it because they keep buying the stupid thing. But we weren't able to exceed the highs from the last 2 days. As a matter of fact, they are descending slightly. Could be broken easily tomorrow. We have a low today which exceeds yesterday's low, but not the day before, unfortunately. You still have massive excessive separation in the short-term moving averages. There is a bubble, and still waiting for the 14-day RSI moving average to finish its move and turn over. Beyond that, everything is primed. Everything is primed for its move down. Just need something to start the fire. And that's it. Tomorrow Ben speaks once again. It'll be interesting to see if he changes his tune, sings a different song, and tries to pump the markets with some promises, some hints, some innuendo, or if the house is able to slam him with some more LIBOR stuff and break his concentration and maybe even get the truth out of him. But that remains to be seen. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.